Thanks for joining us on Parliament. This is Bloomberg Quint. I'm Harsha Subramaniam.
And I'm Meera Dugal. Let's get you the headlines this afternoon. Indian markets come off the day's lows, but Nifty continues to trade below the 10,600 mark. Banking stocks extend losses.
Nearly 10 lakh public sector bank employees have gone on strike today. ATM services may be hampered.
IDBI Bank may look to split its retail and corporate banking divisions and hope to bring in an outside investor into the retail arm. That's a Bloomberg Quint exclusive.
CBI has filed a charge sheet against key personnel in AirAsia India, including Tata Trust Managing Trustee Venkatramanan Ramchandran and AirAsia founder Tony Fernandes.
And higher crude prices and dividend payouts from IOC and HPCL are expected to aid ONGC's numbers.
We'll get to all of that in a moment, but let's talk about where the markets are. There are global uncertainties, local factors as well. Neeraj is here, as always.
Hey guys, good afternoon. By the way, I removed my money from the ATMs yesterday, so I'm kind of safe. But the markets too have recovered a bit of lost ground. The Nifty Bank, if you pull up the intraday of the Nifty Bank, I think at the current point of time, it's broken into the green. And that's led the pullback on the indices as well. So while we started off very, very low or reasonably lower, in line with what the global markets were doing, we have clawed our way back. Just probably points towards some bit of inherent strength that the markets are showing the last few days. No apparent reason, but we're doing reasonably okay for ourselves. The mid caps and the small caps too, they didn't even crack as much as the Nifty Bank had, but right now trading absolutely flat. So the market breadth is doing reasonably okay. On the large cap end, the result boys and the newsmakers are continuing. So M&M, for example, is still trading in the green after the move that it had yesterday. Stocks like Bajaj Finance are doing reasonably okay for themselves. So those select names are okay. That 1 paise cut in petrol prices has not really led to too much, but OMCs are leading, some bit of a pressure. Yeah, interesting confusion today, guys. I mean, we may laugh about it, but from 60 paise to 1 paise, it's very, very interesting as to what's happened there. Nevertheless, the stocks are kind of unimpacted. But two pockets which have stood out, once again, power and select mid-sized power companies have done well. So Torrent, JSW and a few others, I think had a reasonable outing or have had a reasonable outing in today's session. So that's one. And then the newsmakers. So on the gaining side, Merck, the global deal that's happened, and there is talk of a special dividend and a large one coming in. So Merck Pharmaceuticals up about 20% in the session today. It's only built on strength, so continuing to rise. And two stocks, Vakrangi as well as Manpasan. No prizes for guessing, both of them down and out in the session today as well. The only thing is in Vakrangi, look at the volumes there for a stock which is down. So first, let's just stick to the chart of Vakrangi. And the chart is not that important, as are the volumes. 80 million shares traded for a stock which is on a lower circuit. So there's a fair bit of trading that has happened in the session today. Otherwise, on a stock on which there are only sellers in a lower circuit, you won't see high volumes, as is the case in 1% today. So if you bring up 1%'s chart now, you will see that the volumes are not really sky high. It's less than a lakh shares. So the volumes are not high, and therefore it would probably lead you to believe that the pain in 1% could well continue because the selling is not done and dusted. In Vakrangi's case, it's different. Lots of days of selling, but in today's session, the volume substantially higher than what you would normally see in a Vakrangi. But yeah, both the stocks continue to remain under pressure today.
All right, Neeraj, thanks so much for that. Let's move on to news. Debt leader IDBI Bank has put forward a proposal for a turnaround of the lender, which is also incidentally under the RBI's prompt corrective action framework. A large part of that turnaround plan hinges on a demerger of the retail bank from the corporate book. Nikunj Ori is joining us with details that he's picked up on what the plan could entail. Nikunj.
The IDBI Bank has submitted a revival plan to the government seeking to demerge its corporate and retail lending portfolios. The plan was submitted by IDBI Bank 2 months ago to the government, and the government is also in favor of segregating or splitting the two operations of IDBI Bank. According to sources, this is one of the possible ways to address concerns of potential investors by segregating the corporate and retail lending portfolios of IDBI Bank. The government could then go ahead and sell its stake in a retail bank, which the government feels would get them better valuations and would have more takers. A separate entity for corporate loans could then focus on resolving the stressed assets. Remember, the finance minister in his budget speech for 2016-17 had said that the government intends to lower its stake in IDBI Bank below 50%, and this plan would help them in reviving IDBI Bank and cutting its stake in the debt-laden state-owned lender.
Thanks for that, Nikunj. 10 lakh bank employees have gone on strike today. 9 unions are spearheading the agitation. More than 1 lakh bank branches across the country are expected to be affected by this strike. Purva Chitnis sent this report from Mumbai's Azad Maidan, where some of these employees have gathered to demand better wage revisions. Listen in.
Around 1 million bank employees and officers representing public sector and certain private sector banks are on a 2-day strike starting today under the umbrella of United Forum of Bank Unions. The employees are on strike mainly to press for a demand of a wage revision which is due from November 2017. The Indian Banks Association, after negotiating for 1 year, has offered to give a 2% wage hike, which the employees have downright rejected, and they demand for at least a 20 to 30% wage hike. After the 2 days, the forum would once again convene to chart the next plan of action. And they have also threatened that if their demands are not met, they would go on indefinite strike.
All right, these strikes more nuisance value more than anything else. As banking has become more and more electronic, I think the actual impact on business tends to be relatively limited. But let's listen into what employees and officers of various state-run banks are demanding.
The IBA is giving us only 2%, a meager amount, whereas we bankers are working, say, round the clock. So we don't deserve this meager amount of 2%. We want much, much, much higher.
What is that higher amount that you want?
30%. 30%.
And do you think like your demands would be met?
We are going to fight it out. That is by this UFPU.
But after 2 days, the strike is only for 2 days.
We will have our program. The program will be chalked out. We may go on indefinite strike also.
We are not at par with the central or state government where which we are paid. Despite we are having holidays on 2nd and 4th Saturdays, we are still called to office and we are told to implement all government schemes, which will convert into NPS. And later on, because of this NPS, they tell we are not performing. But all the major corporate loans that are taken at a higher level, the decision is taken at a higher level. We are told to pass this loan. We are told to process it. Whenever there are division in the parameters also, financial parameters, still we are told to process all those loans. We definitely need to protest. But what happens now? There is no hearing. There should have been a wage negotiation at an even level, which has not taken place. Despite we are being on a strike, we'll be working again on the next Saturday and Sundays to ensure clearing of the checks, ma'am. And we are ensuring that at least the ATMs don't run dry. Despite protesting over there, we'll be going up and taking a backup to see which are the machines dry.
Employee protests are just one of the major problems ailing the Indian public sector banks. Private peers are fast making inroads into what has traditionally been government-owned banks' bastion. Vishwanath Nair is standing by with some numbers to tell us just how much market share has been lost by the public sector banks.
Right, Harsha. So you know whatever is happening with the public sector banking system. Just during the 4th quarter, they've reported massive losses exceeding about 60,000 crore. While this is happening over the last 4 years, they have been actually continuously losing market share as a share of total advances. As you can see, in FY15, March 2015, the total share of public sector banks of total loans was about 71.6%. That has dropped to about 64%. By the end of this financial of FY18. This shows that wherever they've lost market share, those are the places where mostly the private banks have entered and grown their books. In the next chart, you will see where exactly this loss in market share is coming from. It's mostly the prompt corrective action banks. There are about 11 of them. And these are the first 4, and then we'll see more. But there has been a clear fall in the outstanding loans of all of these banks. In the next chart, you will see more banks. Most of them have been showing a negative growth as far as their outstanding loans during financial year 2017-18 is concerned. There's also a chart that we should show about how private sector banks advances and deposits share has been growing. As you can see, over the last 6 months and over the last 12 months, their share of advances and deposits has been rising continuously, which clearly and most of this has come because the public sector banks have not been growing. There's State Bank of India as well as most of the private sector banks who have been gaining this market share. So, it's important to note that while there has been a shrinkage of the outstanding loan portfolios of these public sector banks, private banks are growing and they are trying to fill that gap and make credit more available. That's what we've learned from these numbers now.
All right, I think important to point out, I'm sorry, I'm just going to step in, is what has happened on the deposit market share. And that chart, if you go back to it, will show you how the deposit market share of public sector banks is also growing more slowly now, suggesting that even that last bastion, which was deposits, not so much credit, seems to be going away from the public sector banks slowly.
Okay, let's move on and talk about what the CBI has done. The CBI has named some key functionaries of AirAsia India in an FIR filed yesterday. The one name that stands out in that list is Venkatramanan Ramachandran, a close aide of Ratan Tata, also who runs Tata Trusts. Especially curious since Cyrus Mistry, who was unceremoniously removed as the chairman of Tata Sons, did name him in some of his letters to the Tata Sons board, accusing him of corporate misgovernance. Sajid is here to take us through some of those details and what the CBI is probing right now. Sajid.
Hi. CBI is looking at the entire AirAsia transaction, so starting from the time it got set up as a joint venture between Tata Sons, AirAsia and some of the Indian partners. As part of that investigation, AirAsia always wanted to come into India and they wanted to start international operation from day one. So the first thing which CBI is alleging is that AirAsia India, which is a joint venture between Tata Sons and AirAsia, is actually a subsidiary of AirAsia Malaysia, and that's what is a violation of the FDI guidelines. The guidelines very clearly states that a foreign airline can own up to 49%, and the control and operation has to be with an Indian partner. As per a brand license agreement between AirAsia and AirAsia India, it acts in such a way that AirAsia India is a subsidiary of AirAsia, and so that's a violation of the FDI guideline. The second one is the lobbying charge, which has been put on some of the functionaries of the company, which includes Venkatramanan and Tony and others who are the directors on the board of AirAsia India. The CBI is alleging that these functionaries tried to influence officials of Ministry of Civil Aviation and FIPB to change the 520 rule. Now, the 520 rule was basically you need to have a 5-year experience and 20 aircraft fleet before you can actually fly out to international destination from India, and that's meant for all the domestic airlines as such. CBI further goes on to allege that some kickbacks or bribery was done. AirAsia had transferred some 12 crores to entities which are linked to Deepak Talwar and Sunil Kapoor. Now, those are prominent lobbies who are based out of Delhi, and this money was used to bribe officials in ministry, government and government offices. So that's something which is again there. The genesis of this comes from the Cyrus's letter of October 25th, where he says that there's a fraudulent activity that happened in AirAsia India, which ultimately led to forensic audit by Deloitte, and then there was a charge or FIR was filed against a former CEO of AirAsia India, which is Midhu, which is there. So it's again coming back. It's CBI has based the entire FIR based on a source. They haven't named who the source is, but it's again investigation which will be going ahead.
All right, Sajid, thanks so much for explaining that. Meantime, Subramaniam Swamy is confident that the CBI's FIR strengthens his case against AirAsia. Remember, Swamy had filed a public interest litigation against that airline, claiming that AirAsia India is totally illegal and must not be allowed to operate. Listen into what he had to say earlier today.
वो भी मेरा ही केस है, हाई कोर्ट में PIL में AirAsia का है, चल रहा है. उसके आधार पर CBI की इन्वेस्टिगेशन चली. अभी ED ने ये ढूंढ लिया है कि सिंगापुर में ऐसा $5 मिलियन उसके पॉकेट में, उसके खाते में, उसके मित्र के खाते में जमा किया है. तो मुझे पूरा विश्वास है, क्योंकि AirAsia तो टोटली इलीगल एयरलाइन है, इसको परमिशन मिलना ही नहीं चाहिए था, और मैं उसीलिए मेरा केस भी है. तो केस को बल मिलती है और मेरे केस के आधार पर हुआ है. और जब टाटा को पता लगा कि साइरस मिस्त्री ने एक बहुत बड़ा रिपोर्ट तैयार किया है डिलॉयट कंसल्टिंग कंपनी के आधार पर, उसके बाद उसको निकाल दिया था. तो जितना देर ही कर सकते थे किया है, परंतु अब तो सब खुल गया है और सामने है.
Subramaniam Swamy there. All right, let's move on. 3 months after it started, it's back to square one for Fortis Healthcare. The board has decided to invite fresh tenders for the proposed takeover of the company. The country's second largest hospital chain said it's seeking new bids from all interested parties, and the Burman Munjal offer stands terminated. What's also changed is a clear roadmap that needs to be submitted by the bidders this time. This includes an upfront preferential investment in Fortis and a proper plan by SRL and RHT for their buyout. Darshan is here with some more details on what's been a go around for this.
Yeah, so it's reached 360 degrees now. It's at the same point. Basically, when the EGM happened, and we pointed out that probably this EGM, if Brian Tempest is voted out, would mean that there will be a change of management, won't go with Hero, and that's exactly what's happened. So this time around, what Fortis wants is a clear roadmap. They've given the guidelines. They've asked 3 of the biggest bidders, that was Manipal, the Hero Group, as well as IHH, to come and bid for it. They've also kept it open for other bidders. So if someone else has a better offer, they are open to it. Now, the expression of interest has to be done by tomorrow. And the day after tomorrow, Fortis will announce which are the companies that are shortlisted. Now, what they've done is that, they've given an opportunity of 10 days of due diligence in terms of financial as well as legal. That will be allowed. Meeting of the management will be allowed. So, and post that, the suitors can take a call on what they want to do. Now, basically, the key contents of the binding bids. First of all, they're saying a minimum investment of 1,500 crores should come in. Secondly, they should plan for funding of RHT, which they have to buy out. There should be a proper plan in terms of exit of P players from SRL. The bids have to be unconditional. They have to also tell them what is the source of their funding, how they plan to go about buying Fortis, and finally, the plan for retention of current management and employees. So this is what they want. So by 14th of June, between 8:30 and 9:30 a.m. in the morning, the bids have to come in, what the companies are. Post this bid, Fortis will decide which is the best suitor, and the criteria that they have said is, first of all, they will decide which is the best valuation, which is which putting the highest quantum of investment. So that is, they are looking at it. They are also looking at someone who plans to address the long-term and short-term requirements, especially in terms of SRL and RHT, how they plan to go about it. The bidders value vision for the company, which will benefit the shareholders, and finally, the deal has to be simple and it has to be time bound. So these are the 4 criteria they will look at, and based on that they will decide. So probably anytime after June 15th, you'll probably get to know who the next suitor for Fortis is.
All right, Darshan, thank you so much for that. Let's move on. After hiking petrol and diesel prices for 16 days in a row, Indian Oil Corporation cut prices by 1 paise today. The state-owned refiner has reduced petrol prices by a touch as well. Earlier in the day, they had said was the quantum of reduction was 60 paisa and 59 paisa, but most of it has been rolled back within hours.
Meanwhile, passengers flying Indigo should get ready to shell out more. The budget carrier will charge up to 400 rupees more for domestic flights to offset higher jet fuel costs. The surcharge will come into effect from the 30th of May.
One company that will gain from the rising crude oil prices is ONGC. The state-owned explorer is one of the last nifty companies to be reporting March quarter earnings today, and the oil surge is expected to help numbers. Somit Sarkar standing by with what analysts are pricing in. Somit.
So if you see, ONGC is expected to report a strong set of numbers in the 4th quarter of financial year 2018, purely on the back of higher commodity prices. Now if you see the headline numbers, the revenue is expected to be higher by around 7% to close to 24,520 crore rupees, while EBITDA is expected to rise by 20%. Margins are also expected to expand to around 53.6%, while net profit is expected to be higher by around 30% in the 4th quarter. Now, net realization is expected to come in at around $66.3 per barrel, and this is expected to be the highest net realization for the company in the last 13 quarters. And the quarter was aided by higher crude oil prices. Brent crude, that is the Asian benchmark, averaged around $67.22 per barrel versus $61.4 per barrel in the last quarter. Now, on the operation side, if you see the crude oil and gas production volumes are expected to be flat at around 6.5 million metric tons and 6.2 billion cubic meters. On the financial side, the subsidy burden is expected to be nil for the company, but the depreciation, depletion and amortization cost is expected to increase in the 4th quarter compared to the last quarter. Now, the other income is expected to be higher because of higher dividend income that the company will receive from HPCL and Indian Oil Corporation. The company is expected to receive a dividend income of close to 3,700 crore rupees in the fourth quarter from these two companies. However, the higher other income will be partially offset by higher interest costs in the fourth quarter. The company had taken a debt of close to 31,000 crore rupees to acquire government's stake in HPCL, and because of this the interest cost is expected to be higher for the company in the fourth quarter. Lastly, key things to watch out for would include the oil and gas production volume number, the development plan for the KG basin, the capex guidance that the company gives for financial year 2019, clarity on funding of repayment of debt related to HPCL, and any clarity on subsidy burden, if any, because the petroleum subsidy in the budget was kept low.
Soumya, thank you for that. Let's move on now. Donald Trump's decision to reimpose sanctions on Iran is one of the main reasons for the price surge in oil. But India plans to ignore them. In a press conference yesterday, External Affairs Minister Sushma Swaraj categorically said that India only complies with the United Nations mandated sanctions and not those imposed by one country on another. Ian Marlowe, Bloomberg News, joins us with implications of this move. Ian, what have you made of this?
Yeah, U.S. President Donald Trump is clearly trying to ramp up pressure on Iran, and India, one of the U.S.'s key allies in Asia, is looked to support Western policies throughout the region, is basically planning on ignoring those sanctions as they apply to Iran and Iranian crude. Sushma Swaraj yesterday said that that India did not recognize any country-specific sanctions. She said she only recognizes United Nations ordered sanctions. So under the previous regime of sanctions against Iran, there were United Nations sanctions, European Union sanctions, and US sanctions. And under that, India actually pulled back their oil purchases from Iran a little bit, but they actually still continued to import Iranian crude, and that's obviously something the US would prefer not to happen. So as it stands right now, the US is likely to get a bunch of people on board, even though the European partners are a little bit annoyed with Trump over his handling of the Iranian nuclear deal. But India is definitely one key country in Asia, one of the world's largest oil consumers, and they're planning on ignoring any sort of sanction that would come down on crude.
Ian, thank you so much for that. Let's slip into a quick break on that note. Coming up, the threat emerging in the Eurozone and all the political disruptions in Italy. That's keeping markets on tenterhooks. We'll discuss the implications on Asia on the other side.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
You have to chase the value. What market is reflecting is change in the value. It is because of value migration that you keep seeing the new businesses coming up, new companies coming up. Value Migration by Adrian Slowinski. It is a wonderful book by a professor from Harvard.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you.
do you have analysis paralysis, a case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Back on lunch, the headlines at this hour. Markets trade near day's highs. Nifty trades above the 10,600 mark.
European markets open slightly lower as the Italian crisis batters financial markets.
State Bank of India hikes rates on its term deposits for tenors between 1 and 2 years by 25 basis points.
All right, let's take a look at the markets. Domestic first, about 0.1% lower on the Nifty. Agam's here with the movers. Afternoon, Agam.
Good afternoon, Ira. Well, the benchmark indices have recovered substantially from day's lows. In fact, we did see cuts of as much as 60 points on the Nifty, and the Nifty just a few minutes ago had moved into the green. So there has been a lot of recovery, and this is largely on the back of some of the larger cap companies which have also been advancing in trade today. Some of these include the auto names. But before I consider all the names out there, let's address what's happening with the broader markets too. Both the mid-cap as well as the small cap indices are also trading marginally in the red right now, largely flattish. And in terms of the turnovers, well, as one might expect, we have seen a sharp surge considering we are looking at expiry tomorrow, and that's the reason why the futures and options segment on the National Stock Exchange is looking at a number of a little less than 9 lakh crore rupees. We have seen volatility return to the pharmaceutical index, largely on back of weakness in Piramal Enterprises or Aurobindo Pharma, and on the gaining end we do have Mahindra and Mahindra now moving up, also the top Nifty gain on today's day of trade, followed by Coal India, and Bajaj Finance resumes its up move, and these are perhaps some of the stocks because of which we are seeing that improvement in the benchmark indices for now.
Agam, thank you for that. Nearly a decade after protracted Greek debt crisis spooked global markets, a fresh round of political turmoil in Italy has revived fears about the fate of the European financial system and its common currency, the euro. Italy may be headed towards snap elections as early as July after the latest attempt to form the government failed. The worry now is that the repeat elections could turn into a de facto referendum on Italy's membership of the euro. Jody Schneider of Bloomberg News has the latest.
Prime Minister Delegate designate Mr. Cottarelli wants to form a government. He says this is not, this is not off the table. He just needs more time. Yet, of course, the opposition parties, the anti-immigrant League and the anti-establishment Five-Star movement have absolutely no incentive to help him form a government. As a matter of fact, they want elections as soon as possible. Yesterday, we were at this time we were talking about elections maybe in September. Now it could be as soon as July. If he can't form a government and they have to dissolve it, they have 60 to 70 days, and that would bring it to July, which is, of course, when those other parties want to see a vote, which would effectively be a referendum on leaving the Eurozone.
From time to time, large global investors have raised concerns about the actual efficacy of the European Union and the common currency and whether it can survive in the long haul. Well, George Soros has been one of those skeptics, and he once again says that the European Union is facing an imminent existential threat.
An existential crisis is no longer a figure of speech, but the harsh reality. Europe needs to do something drastic to escape it. It needs to reinvent itself.
All right, let's get an expert voice. And Ken Peng, investment strategist at Citigroup Global Markets Asia, joins us on the phone line. Ken, thank you so much for joining us on Bloomberg Quint. What have you made of this political instability in Italy that seems to have created a bit of a turmoil in markets? At least on the bond side, we did see some panic. Would you call this as knee-jerk, or is this symptom of a deep-rooted problem?
I think it is symptomatic of a deeper problem because the fabric that holds the euro together is relatively fragile. and the rise in populism is not just limited to Italy, but also other parts of Europe. So this is clearly a long-term issue. However, I do think it's not very immediate. There's a lot of things we don't know. When will they have the next election, whether they will actually have an election, and how the populists will perform, and what kind of campaign messages will be will this be revolving around. I think we should give them some more time to observe whether this, even if they want to leave the euro, it will be a very long process. Look how we had the Brexit referendum nearly 2 years ago, and at this moment there's still not a lot of clarity exactly what's going to happen with the UK, and that doesn't even involve currency, right? It's just the EU membership. So I think we don't need to really worry about an immediate demise in the common currency, but this clearly highlights that there are a lot of structural issues that are very difficult to resolve.
Ken, from the perspective of what this is doing to markets, two elements to it. One, we saw some amount of flight to safety with the US 10-year yield coming off quite sharply. Now, that could potentially be a relief to emerging markets. But on the flip side, you saw, the euro come off and hence the dollar strengthen consequently, which could play out negatively for EMs. Which of those two are more important to you?
I think even before this, the Italian populist parties claim all the headlines, there's already some worry about emerging market growth, right? So what's happened is that the stronger dollar, whether it's because of higher U.S. rates or because of risk-off safe haven flows, a stronger U.S. dollar makes liquidity tighter for emerging markets, right? So foreign investors are pulling some money out, and also domestic monetary policy has been tightening. You've seen a series of rate hikes, in Philippines or Indonesia, and you see China also tightening liquidity, more for domestic reasons. So the overall liquidity situation is fairly tight, and that's going to weigh on market sentiment in the coming months. So I think that even independent of what's happening in Europe, is going to weigh on growth in emerging markets. So this is something that we have to deal with. Yeah.
Ken, you mentioned risk off. What is your assessment of appetite right now? Is this Italy crisis, in a sense, going to dampen sentiments even further? And where do you think is smart money moving?
I think I'm not quite sure exactly where smart money is moving. Probably to treasuries, to higher grade credit. But I think for emerging markets generally, particularly in Asia, right, the resilience is still strong. External resilience is still strong. For example, you look at North Asia, China, Korea, Taiwan. These guys have massive amounts of FX reserves. Even in India, even in Indonesia, the current account deficit is smaller than what it was in 2013. India is not terribly exposed to foreign trade. So I think the degree of resilience is pretty strong, and the drivers of growth in this region is consumption, middle class growth. These elements will still be with us for many years to come. So I think EM Asia is still a pretty good place to be if you are a global diversified investor, and we just have to go through this period of acute uncertainty. And I think you'll see investors, particularly those from Europe, if you have, existential issues about your common currency, you probably want to diversify to somewhere where, politics is more stable and drivers of growth more sustainable.
All right, Ken, thanks so much. Appreciate you taking the time to speak to us. That's the Italian story playing out in moving across markets. Chintan of Morgan Stanley also weighs in on what he sees the risks as emerging from this crisis for the rest of the world.
I guess the way it transmits it through financial conditions. We can see what is happening in global financial markets. We are seeing the credit spreads widening in Europe as well as in US. And to some extent, we've seen that to begin to happen in Asia too. So I think the concern is that whether this is going to broaden out to the rest of the world in terms of financial conditions and then on to the economy. So that's how we economists are watching this development.
Do the fundamentals of some of these economies provide some level of comfort further on? Are we getting overly excited or depressed by the political machinations that are unfolding there?
That's right. I think the fundamentals in Europe are different. The fundamentals in EM broadly are different, and fundamentals in the rest of the DM are also in a much better shape this time compared to what you were going through in 2011, or even for that matter for emerging markets when what was going on in the financial markets during 2013. So I think the backdrop of EM and DM balance sheet and fundamentals is much more different. So we should be able to absorb this tightening of financial condition and not have a major derailment of global growth outlook. But clearly we'll have to see what exactly pans out in Italy over the next 2-3 months.
What options do you think the ECB has in light of what's going on?
Well, I think the ECB's focus should be, or would be probably, to see what is happening to financial conditions in Europe more broadly and the impact of that on broader growth environment in Euro area. And eventually, when things look like they are probably going to impact the broader market conditions as well as economic outlook, we would expect the ECB to come out with some response which addresses that risk.
Chintan here, Morgan Stanley. Meanwhile, the interest rate cycle in India is turning. The RBI may tighten policy next week to keep inflation in check and stem the rupee's decline. Bloomberg News' Shubhadeep Sarkar joins us now with what the rate market moves are indicating. Walk us through some of that, Shubhadeep.
Yeah, so Harsha, what we have done is basically taken some market indicators to see how the rate markets are signaling ahead of the policy next week. As we know, the markets have always tend to run ahead of what our economists say, and we have seen that markets have been signaling tightening much ahead than what economics expectations have been. We have seen economists, actually some economic forecasts doing catch up, with now a few banks now looking for a June policy hike. Now, if we look at the charts, we basically taken the first chart we've taken is the spread difference between the repo rate, the central bank's policy rate, and the 10-year yield. We see that the spread has widened to about 175 basis points currently. Typically, historically, over the last 10-year average is around 85-86 basis points. So basically, the widening spread signals that basically the cycle is turning, and bond yields tend to bottom out before the cycle turns. So this is the first chart that kind of shows that probably the rate cycle is turning and we're in for hikes. Second, then we looked at the short bond versus long bond trade. So basically, shorter bonds have run shorter bond yields have run up much more than the longer bond ones, so which has caused the yield curve to flatten. Now, typically, short bonds tend to underperform when the fear is of near-term rate hikes than a series of prolonged hikes, where the longer end underperforms in that case. So here we have the short bonds underperforming. The third chart, if we can pull it up, is looking at the interest rate swaps. So we are looking at swaps payable now versus swaps payable 1 year down the line. So that is showing a gap. That swap spread is showing a gap. It's the highest since around 7 years. So that again is another indicator that interest rate cycle is more on the tightening, and we are going to see rate hikes going ahead. Also, interestingly, offshore swap rates are signaling that India's rate hikes would be probably the most in Asia. Yeah, I'm excluding Indonesia here because Indonesia doesn't have a swap market. So excluding Indonesia, we have India signaling the most hikes over the next 1 year among the emerging Asian nations. Interestingly, Indonesia today hiked for a second time in as many months. Philippines has hiked rates. The Philippines has also indicated their willingness to hike more. So clearly, it's now a regional play where we're seeing emerging markets hiking rates too, and as a defense against to protect the currency and outflows.
Right, Shubhadeep. That's ahead of the policy. We will be all prepared perhaps for rate hikes, or at least indication towards rate hikes getting closer. Just want to briefly mention on that point that State Bank of India has hiked deposit rates, a marginal hike, 5 to 25 basis points across a number of tenors. But you are seeing tightening liquidity reflecting in rates, not just market, but also banking rates. And then perhaps we'll see the RBI and the repo rate catch up as well.
All right, let's move on now. Vakrangi and Manprasad Beverages have one thing in common. The statutory auditors decided to step down just before they had to sign off on the company's earnings. Both companies have since appointed new auditors, but that hasn't helped the stocks recover. So how worried should a retail investor be about the company's financials, and should the erstwhile auditors have given a more detailed explanation for stepping down? Menaka posed these questions to former ICA President Amarjeet Chopra and to Gautam Nayak, partner and of CNK Associates, and this is what they had to say.
Shareholders are bound to be perturbed as to what is happening in the companies. So far as Vakrangi is concerned, I am not too bothered because PwC were appointed only during the year and they did only 2 of the quarter's reviews. And probably they realized just before the end of the year that the kind of information that they should have been getting, they have not been able to get, and that they prefer to resign rather than doing anything else. But so far as Deloitte is concerned, I am little surprised because of the fact that they have been auditing this company for several years, and I think the management and the auditors must have been enjoying some kind of a rapport so far as the providing of the information is concerned. And if you look at the last year's reports itself, there have been unqualified opinions even with regard to internal financial control reporting. So suddenly what has happened, it's very difficult to say, but definitely something happened which spurred them to resign, and that seems to be very, very disturbing in fact, and shareholders should really be disturbed as to what has happened in the company.
Yeah, fair enough. And I think the responsibility of trying to understand or trying to explain to shareholders what has happened lies equally with the auditors as it does with the company, of course more so with the company. And that brings me to the second point that I want to put to both of you. There is just simply not enough information available as to what has gone wrong. You pointed out, Mr. Chopra, that Deloitte has been the auditor for now several years of Manprasad Beverages. In its resignation letter, all Deloitte says is that significant information was not available for it to have comfort to sign off on the accounts. Even in the case of PwC and Vakrangi, yes, they were there only for a couple of quarters, and yes, their resignation letter offers a little bit more detail, but it's only a little bit. They said that with regards to information pertaining to 3 revenue items, this was election books, bullion and jewelry, they did not have adequate information. In some cases, the responses from the company were contradictory as well, and therefore they did not have the comfort to sign off on accounts. I want both of you to explain to me, starting first with you, Mr. Chopra, on should the auditor resignation letters not have more information? Should shareholders not demand to know more? And then I'll get to what the company's responsibility is.
No, I'm very clear on this that so far as the auditors are concerned, even under the Companies Act today, we are supposed to explain as to why they are resigning, and I think we are duty bound to tell the public why we are resigning. Merely a one-liner is not good enough. I think so far as the letter of PwC is concerned, it is still a little bit elaborate, but so far as Deloitte are concerned, I think the letter does give out specific reasons, except for saying yes, they have not been able to get the information. And I think if the information can really be prejudicial to the public interest, which they are not providing, I think it is not good. Ethically, if you really ask me, even otherwise, even to the incoming auditor, if you are able to provide the reasons today in the public domain, I think it will be good for the incoming auditor also to establish whether he should be accepting the appointment or not. By not giving the reasons clearly, explicitly, I think we are trying to hide more than what we are trying to reveal, and that's no good. Particularly when I am resigning from an assignment which I have been doing for years together, I think there is all the more reason to say as to what really went wrong suddenly that one had to resign from the assignment. After all, we don't hear of the resignations time and again of the auditors, and why should an auditor resign if at all the information is being provided and if there is nothing wrong in the organization for that matter. So far as PwC is concerned, I think still they have tried to explain something, contradictions also with regard to the explanations also, but so far as the resignation letter of Deloitte is concerned, I think it lacks clarity.
Yeah. Gautam, where would you stand on this? Because I know that, on the one hand, the Companies Act says very clearly that when an auditor resigns, it has to file a statement with both the company that it's resigning from and the ROC, stating the reasons and other facts as may be relevant with regard to his resignation. In this case, we have some information, but clearly not enough. But on the other hand, every time I've called any of these audit firms and asked them, can you not share more? They've cited client confidentiality.
See, I think one has to balance ultimately what is the information that one has and how damaging it would be for the company, as that's one aspect. And the second is the duty of an auditor to report to the MCA what are the reasons. And I think PwC in a sense has struck that balance by saying that it is in these areas that the information is missing, and therefore we are not able to arrive at a conclusion. So far as Deloitte is concerned, I think they've just left it vague, so therefore the public is left wondering, the shareholders are left wondering as to what is that area which they're referring to, what is the problem area. So I think that is something which ideally should have been given in respect of these aspects.
Okay. In both cases, Mr. Chopra, new auditors have been signed on and they've come on to take on the job of PW and Deloitte. The same job that PW and Deloitte did not want to do, two new auditors have agreed to do. Now, as a shareholder, what am I supposed to make out? I'm not a shareholder, but assuming I was, what am I supposed to make of this? That everything's okay, PW and Deloitte didn't want to sign off on this, but there are two other audit firms that are willing to take care of this, so really it can't be that serious. And what about those two auditors themselves? I mean, are they not concerned that two firms from the Big Four have found no comfort in these accounts and therefore have resigned at a timing like this, but these two auditors have agreed to take on the job?
I will only say, Menka, that you see, the company cannot live in vacuum. Company, in any case, has to be audited at a particular given stage.
Sure.
Now, when these two auditors come on, number one, I will also like to say that it is a casual vacancy, but a casual vacancy cannot be filled only by the directors. It has to be approved by the shareholders in the period to come. In the next 3 months, the vacancy has to be, this appointment has to be approved by the shareholders. Only then these auditors come into play, basically. But I am sure that under normal circumstances also the auditor sits with the incoming auditor always sits with the management, have a dialogue with them, looks at their business environment, looks at the economic environment, looks at their business practices, satisfies himself, even satisfies himself with regard to the risks perception with regard to that particular audit. And I think that's one of the things which has been very clearly said even under the standards on auditing. After all, you cannot take up a client which is whose reputation is really bad. Now here, if the auditors, I presume the auditors have done their own risk assessment and they feel that probably either they would be able to qualify the report, or they will be able to give a disclaimer, or they will be able to give an adverse report. I don't think that there can be a clean report under these circumstances under any way, in any way. So if the auditor feels that he will still be able to comply with the standards on auditing, which probably the Big Four firms thought no, they don't want to take any further risks, I think the incoming auditor has accepted the assignment. So let's move on and let's see what happens. But I am very sure that any of the three conditions is going to happen in the reporting. Either it will be an extensively qualified report, or it will be a disclaimer, it will be an adverse report. It cannot be a clean report under any circumstances. And I personally feel that the way the things are happening today, I think most of the auditors will not like to risk their reputations. And I think the Big Four have taken the measure that they thought that the situation warrants them to resign, whereas the incoming auditor feels that he is still able to comply with the standards on auditing and will be able to disclose whatever is required to be disclosed by way of his report.
All right, to close the show, we've got news coming in that WhatsApp is all set to launch its payment services in India as early as next week, but there's a catch. One of its partners who will process the transfers is not entirely ready. Anto Anthony is joining us with the details of what's going to happen. Anto, is it going to be a staggered launch, a big-blown launch, which is going to take on Paytm? Interesting story.
It's definitely going to be a full big-blown launch. So what we have seen is that they had done the beta launch in February. the full-fledged rollout was expected in April, which hadn't happened because a couple of partner bankers were not ready for that. So right now what they're planning to do is Axis Bank, ICICI Bank and HDFC Bank would be rolling out, would be the first ones to see the rollout. So they will be processing the transactions. And at a later stage, State Bank of India, the country's largest bank, will also join them. Also, interestingly, as we remember, while it opened to the rave reviews, many rivals, including Paytm, had raised various security concerns regarding that. So this coming at a time, maybe a week or so after NPCI, which is the umbrella body for the payment solutions, making clear that they have no security concerns at all regarding the WhatsApp payment rollout in India.
And they have all their clearances in place now, including from the Reserve Bank of India. There are no issues for them to launch full-fledged services?
That's what we understand right now, yes.
Thanks, Anto. Thanks a lot.
Thanks for that, Anto. Out of time on the show. Thank you so much for joining us on Lunch.